Hey, everybody. Welcome to the No Shill Zone. It is Monday, 11 a.m. Eastern time. I'm here with Ben Cowen. How you doing, buddy?
Pretty good. How's it going over there?
Good, man. Good. Yeah, we were just having an interesting discussion just before we went live, and I think let's touch on that first. Then we'll get into crypto. But we were talking about what the market is expecting in terms of rate cuts next year, and it's basically pricing in, I think, 130, 150 basis point rate cut. And at the same time, the markets are also saying, hey, we're going to have this beautifully soft or no landing scenario. And I think one of the things that we were both talking about is like it's basically like, dude, if we have a soft landing or no landing, there's no way the market is going to get those rate cuts. And so, one of those two scenarios has to be false, but the markets right now are going on the narrative that somehow both will happen. And honestly, I don't know why the market's thinking that, or if it's just kind of an end of year, like we just want to be in the market and hope for the best type thing. What are your thoughts on that, man?
Yeah, it is interesting because I think a lot of people are sort of thinking like we're going to get 5 or 6 rate cuts next year, but that the Fed's going to cut just sort of out of the goodness of their heart, right?
Right.
I kind of think I think one of the ways to sort of view these probabilities, I think I've mentioned this a couple times, is that I think it's sort of like a bimodal distribution where like there's half of the investors or a certain percentage of the investors are sort of betting on a hard landing, and then the other investors are they're sort of betting on like a no landing or a soft landing. And therefore, what we're looking at is somewhere like somewhat of a combination of in between. Because the reality is that, even what was it, 130 basis points of rate cuts is what you said?
Yep.
Even that probably wouldn't be sufficient in a hard landing scenario, right, to turn the ship around.
Right.
So I sort of think we're looking at sort of an average of sort of like the bimodal distribution. We're looking at something that's kind of in between both a soft landing outcome where you would probably only get 50 basis points of rate cuts or something, right? Not a lot, versus a hard landing where you'd likely get, 200 basis points or more. So that's kind of what I think is going on. Yeah. And I think we've sort of looked at this chart, and I can't think of a time in the last 2 years where the market has actually been predicting, very, very accurately where this thing's going to be in a year. So I don't think it's going to follow this path, but it is interesting to think about.
Yeah, and no, I'm in agreement with you on that, and I think that this market and just generally people are positive, so we want to believe the best outcome is going to happen. Obviously, the best outcome is the best outcome for our financial future. Whether you're in a 401k or so, you want to really believe that, but it's just hard to imagine. And I agree with you; it's probably somewhere in the middle. And I've speculated that we could be kind of in this kind of like a lost decade type thing. And a lost decade doesn't necessarily mean you're in this horrendous recession for a decade. It more just means like you're kind of like just bobbing along at an okay clip with no real growth. And it's just kind of a type scenario. And it wouldn't shock me to see that type of scenario play out for a long period of time. Let's kick it off and quickly jump into, I'm
Can
going
I,
to flip over to what's that?
can I just ask you something about that? Because
Yeah, sure.
I think and we can just stay on your charts because I just have a question about it. In periods where we're just sort of like bobbing, like going sideways, or maybe putting in new highs, but then kind of coming back down, not seeing the extreme growth that we see in some years. Does that become more of like a stock pickers type paradise rather than like an index fund investing type paradise?
Yeah, I mean the ETF index fund is like, you're banking on that 10+% per year in the stock market, always giving it to you. Versus when you get these kind of middle grounds, the middle ground will be a combination of where people get a little bit of greed with euphoria, and then they get fearful, and then it creates a chop shop, right? So investors that are used to just those consistent longer term markets that grind higher, they're not going to get their returns, but it becomes much more of a swing traders environment. Absolutely. Yep.
Right.
Yep. So, looking at Bitcoin last night, we saw this dump out. Couple things that I thought were interesting about the dump out. So, one even before the dump out happened, and I had a video I did for my members on the weekend. One of the things that I was looking at was these negative divergences starting to build in the daily charts of crypto, and that are honestly very negative. Like it is a warning sign. Now, it doesn't listen. I still think we could go as high as 48 to 50,000. I know a lot of people are now saying that. That's the 618 Fibonacci retrace. There's a bunch of trend lines, if I zoom out, that go to major pivot points that converge right around that level. But you can't deny that you had a high pivot here on Bitcoin and you went much, much higher on Bitcoin. and your RSI was here and it's much, much lower, right? I mean, that's what we call a negative divergence. And you can go to something like an altcoin like Solana, which again, Solana made new highs this weekend, getting almost to $80. And look at the divergence, right? So here's price at its high here, and that was down in this range on the RSI. And then here you went higher and you're much, much lower. And so I do think, for me, it doesn't guarantee anything. We know that no data guarantees anything, but it is something that just says, hey, maybe be a little bit careful in this range. And I was kind of hoping to get your thoughts on where you stand on this.
Yeah, I mean, Bitcoin has sort of been just hanging out above its 20-week SMA for most of the year. If we look at it like this, so the red line on here is that 20-week moving average. This chart down here is just looking at sort of the extension from the 20-week moving average. And what's interesting is it seems like we're almost coming up with a repeat of this pattern over here, where if you look back in January and February, we got extended above the 20-week SMA by about 30% or so. Like we got about above it 30% right here, and then 30% right here. And that's actually where we got extended above it back in November, right here. And then in March, we saw it go even further above the 20-week moving average. And where it just went this past week is exactly where it went back in March in terms of extension above the 20-week SMA. And it corresponded to about 40%, right? So it's had these moves where it goes up, 25, 30% above it, and then it got to 40% above it. And that, at least for this year, 40% above the 20-week SMA is where it seems to lose some steam, right? In terms of that momentum. Now, it doesn't mean that it can't go higher. I mean, if you look at where it reached 40% extension, we did go a little bit higher about a month later, right? You can see we went another 7% higher before then fading back down to the bull market, to the 20-week SMA, the 21-week EMA. But it does just sort of show that, we could be getting to the point where there needs to be a cool-off period, right? And the bulls have to take a break for a little bit, because we have been fairly extended for a long time. And I do think the other relevant way to look at this is to just look at the time between some of these pullbacks. If you were to look at, let me get this date range right here, right? If you were to look at just sort of measurements from this low to this low, it's about 15 weeks, and this low to this low is about 14, and then this one to this one is about 13, right? So we're looking at between 13 to 15 weeks between these lows. We're currently out about 13 weeks right now.
Interesting.
So yeah, I mean, like it wouldn't be that surprising, I think, to just have it cool off for a little bit. And then
when you say cool off, I mean, in terms of price retrace, like, are you talking like a couple more thousand, or we may be back to like the mid 30s or the low 30s? I mean, do you have a sense of that, or?
I mean, no, look, I think it's always possible we could go back into the 30s. And if we get a hard landing, we could go lower than that. I mean, it really depends on how bad things get. I would say, if you look at the 100-week moving average, this is, I don't know if we talked about this before, but the 100-week moving average is now at around 28K, but it is starting to curl back up, right? It's going to start to curl back up here. The reason why I'm looking at that is not because it has to go there, but if you look at every prior cycle, and I don't know if you remember when we talked about the 20-week SMA and how like Bitcoin always falls below the 20-week SMA in Q3 of the pre-halving year, right? Like it did it right here. It did it over here, right? It did it in the cycle before that, and so on and so forth. But another interesting thing is that we've always seen it go to the 100-week moving average, oftentimes in the early part of the halving year, right? So like right here, like this was December 2019 and January of 2020, it had that pullback to the 100-week moving average in Q1 of the halving year. If you go to the cycle before that, you'll see that, we had this pullback to the 100-week moving average in Q1 of the halving year as well. And if you go back before that, right here, we're sort of below it of the 100-week moving average. And that was basically right now, right? Like December of the pre-halving year. So it does seem to be, and by the way, we also fell below the 20-week SMA at the same time, right? At Q3 of the pre-halving year. So I do wonder if that pattern is going to repeat. And look, I mean, even if it does repeat, which again, there's no guarantee. The market is every single cycle it is slightly different, right? And I think that's fairly obvious. But even if it does go to that level, you still have to be on alert. Like, do you get a soft landing like this scenario where there was like a recession scare in the United States, but it didn't actually materialize, right? Like it was just a scare. Or do you get something like this where we get a bounce and then we get a hard landing? And I think that's what we get to figure out in 2024.
Yeah, it's one of those things where, like, as we get into the 2024 period, we're just less than a month away now. It tells you there's going to be some big things. Like, I mean, we'll know. I mean, many people thought we would know by the end of this year, including myself. I thought by worst case, like November, December, we'd know if we were in a recession this year, and that obviously hasn't happened. But you got to figure at some point next year, it's either, okay, no, there's no recession at all, and now it's put to bed, or we do slip into that recession. And then you got the halving with Bitcoin, obviously the spot ETF we're waiting on. How does price ultimately, deal with that? And I'm still in the camp that, this rise in Bitcoin is probably largely, at least a good chunk of it is due to the hope about the spot ETF. And then obviously halving comes after that. But yeah, it does make me wonder, especially with the altcoin moves. Like, you look at some of these altcoins, they have gone absolutely nuts. I mean, we're talking hundreds and hundreds of percentage, 3, 4, 5x. Even on some of the bigger names like a Solana, Avalanche now is one of the big powerful ones. And is this really a new bull market, or is it a fake out? I guess that's the question.
Yeah, I mean, look, I think we'll have to figure out if Bitcoin can continue to lead, because that's the thing. Like, if it is, Bitcoin leads that. It always has, and I think it always will, which kind of brings us to the topic of dominance. And this is something we've talked about forever. I think we were both very bullish on it before the breakout above 40, but when we were below 49% and saying, look, guys, we keep testing this thing, we're going to break out above it. What are your thoughts on it? Because I mean, last week, I feel like everyone thinks Bitcoin dominance went down last week, but
Yeah.
it actually went up last week. The candle looks kind of ugly. Like, from a technical standpoint, what does this candle look like to you on dominance?
Yeah, so I mean, I think that there's a couple things. So number one is, let me show my charts here. Is that number one? It's been playing out exactly as it's supposed to, meaning that you had your previous high here, you broke up, consolidated, broke out, you retraced to the scene of the crime, then you broke out of the next one, retraced to the scene of the crime. Now the only difference here is we only made a slightly higher high, and now we're retracing. I would just say that the question is the altcoin. Has the altcoin run come to a close? The biggest divergences, as I was talking about earlier on the RSIs, are in the altcoins, and it does make me wonder here. Although, again, this is the first time in a little while we're not seeing kind of the same sort of price action. Like, once you hit this retrace here on dominance, it goes up, and it should make. I mean, whatever high it makes, the next retrace should have technically stopped here if it follows the same logic. It obviously came below. So that's something to kind of keep an eye on. The only other thing I would just point out, and let me just erase all of these lines so we just kind of keep a clear sense of this, is that if we look at the longer term dominance, there's a pretty significant trend line. Look at this trend line. And so, maybe this is just a check back. I mean, regardless of those breakouts and retraces to the scene of the crime, maybe more than anything, dominance just has to kind of come back to this level. And that's where it's headed before it can make that new higher high. So in the very least, I could see dominance coming in a little bit more, not much. I mean, we're talking about 52.8 on my trading view chart here from 53.5. But, I still think that dominance continues in the face of the alts. And I think, again, that Bitcoin spot ETF, whenever it's approved, I mean, money is going to flow into Bitcoin from those spot ETFs. I mean, there's no doubt about it that, the mom and pops, they may be hesitant at first, but their advisors will be able to now say, hey, being in Bitcoin is an okay allocation for a small percentage.
Yeah, I mean, as far as the dominance, yeah, I've been bullish on it for a long time. And normally what we've seen in prior cycles is wherever it's going to go, it goes there. It gets most of that path out of the way in the pre-halving year. So, like, before you get to the halving year.
Yep.
So, like, I want to be open-minded to it potentially reversing course in the halving year. But I also know there's another way to look at it. We've talked about this before as well, is that like, last cycle it kept going up until the Fed started to cut rates,
Right.
And so like if the Fed doesn't start to cut rates until sometime in 2024, does that mean it could continue to go up in 2024? And look, in both prior halving years, the yearly open was not the high for dominance in that year, so it could always go slightly higher. The only other thing I was looking at here, and maybe you can show my screen really quick, is I was looking at this candle, and
Mm.
as someone who's been very, very bullish on it, I just want to try to be as unbiased as possible and look to see every single time we've had a candle that looks like that, you know. And this candle, it's a long wick to the upside, and there's a lot of people saying that would mark a top, and you can see like why they would think that, right? There's some evidence to suggest that a
Yep.
long wick up could mark a high, but there's also there are counterpoints, I think, too. And I just want people to be aware of them, just so you don't necessarily everyone think that it has to be on. Although I will admit it's possible. I still lean in the direction that it's not over until really that trend line is broken, or at least until we get to the end of this year. There are a couple of examples where we saw a move like that, and dominance actually continued up. Here's an example, August 2018. And what's fascinating about it is, and also not only August 2018, but also this one right here,
Mm.
April of 2019. And what's fascinating about those two candles is that it's basically where the dominance is today, right? Like you see the red line across the screen, like that's exactly where it had that candle. This candle right here in April of 2019 opened up at 53.21%. And then the high was 55.12%, but then it closed back down at 53.35%. So it was basically exactly what happened this past week.
Mm.
And then a very similar thing over here where it opened up at 54, went all the way up to 58, and then came back down to 54. So I would say there are counterpoints to it.
That
That
is interesting, though. Very, very interesting. Are you still in the camp that you think Bitcoin will continue to gain market share or dominance over Ethereum?
I mean, I think so. I think the only thing to be sort of cautious of with ETH is that the closer we get to January, like the closer we get to Q1 without it breaking down, the probability starts to go up that it could get a bounce, right? So like this table right here shows ETH Bitcoin quarterly returns. So look at
Mm.
2019. I mean, every quarter in 2019 was red for ETH Bitcoin. And so too, every quarter has been red for ETH Bitcoin in 2023. This is one of the reasons I've been so bearish on ETH Bitcoin in 2023. But I just want to remind people that this was 2019, and then you came into 2020, and then ETH Bitcoin got a bounce, and it bounced by like 15 to 16%. It also, I mean, it bounced by a modest 58% in Q1 of 2016. So I do want to at least, people to be aware of that like if it doesn't break down between now and the beginning of the year, like you could see a bounce, but there's still time for it to potentially drop. So I don't know. I'm still in the camp that I think it's more likely to break down than up eventually, but it could certainly be a stochastic process to get there. And then, by the way, a
Interesting.
lot of altcoins just had pretty big bounces on their Bitcoin pairs, And so the
They
question
did.
is a lot of times Ethereum can also see that bounce, but if it does, it's normally the last one to see it. The counterpoint, though, and I feel like I'm talking in circles, the counterpoint is that if Ethereum is not able to bounce on its Bitcoin pair here over the next 3 weeks, then that could be a huge risk off signal for altcoins. It could be a sign that altcoins maybe got ahead of themselves and then have to pull back. So I don't know. We'll see what happens over the next couple of weeks.
Let's turn our attention to gold, and again, whether Peter Schiff is out there and talking his game or anything like that, I think we all can say right now gold is suffering a little bit, right? I mean, if we look at my chart real quick, you had the attempted breakout, it failed for the time being, and it kind of had a retrace consolidation. And now it's actually selling, Friday and today it's getting hammered. Now you are into some support here on the chart. So I think in my game plan this morning, when I talked to people, I said, like, today, to be honest, is a very pivotal level. I want to see it hold this support level if we're going to start to turn back up and reattack that level. The only thing I did want to show you guys is this is kind of cool. Let me go to my weekly chart on the chart here. So if we look at the way the structure of cycles has worked on gold, and let me just bring this up. If we do a date range, right? So if you go date range, you can see here was 112 bars, right? Then here, which was your second one, which was about 79, 80 bars. And then here until the breakout was about 65 to 66 bars, right? So again, my point is that the first one's the biggest, the second one's the second biggest, and the third one is the smallest before the breakout. And I just wanted to draw this comparison here is very clearly this is 83 bars. Then this is 60 bars, and then this reattack is about 32, 33 bars. And so if you look at what happened afterwards, it did have a big move, and that was the 2020 move with COVID and everything. But just kind of an interesting little replication of how it appears the cycles work on gold. So I remain, contrary to what a lot of people, may think, I'm still bullish on gold here. I think that it's again getting rejected. I think there might be some attempt by central banks to hold price down as they continue to accumulate. But yeah, I mean, I thought that was just an interesting little factor on gold.
Yeah, there's these longer term moving averages that seems to have held in that last bull market back in like the 2000s, and you had like one fake out below it right here. I almost wonder, it sort of seems like, it's been holding it as support, and then it had this fake out, and then it's been holding it as support again. So I mean, as long as it stays above 1867, like 1800, 1900, 1850 to 1900, I think it still is technically bullish.
Yep.
But I mean, look, if it takes out this low over here, like from October of 2022, then that's probably not a great sign. But yeah, I think as long as it's up here in the 1900s, it's still relatively attractive. The thing that I go back to is, and I know you've said this before, is, I mean, it's been knocking on the door here so many times.
Yeah.
And it just keeps coming back down. And I'm like, how many more times does it have to knock before the door is going to finally open? And I kind of thought it was going to already open.
Yeah.
Yeah,
I honestly did think that this last hit would have been the break point. If it doesn't happen on the next hit, whether that's in a week, a month, or a couple months, that's where I would be really concerned. Like, it's hit enough. If we look back here, in fact, let me just bring this back up here on my chart, is the only thing that I can kind of draw the comparison to, and let me just get rid of these, is that the last hit right here. So right down here, we had this little small retrace, and then it finally broke out, right? So I mean, the question here is this the last little retrace, and then we curl up? So essentially, it should be the most shallow retrace. Here was a shallow one. Here was the deepest one. Here's the most shallow. This should be the most shallow, and then the breakout. So I think I agree with you. I think it's either time to put up or shut up for gold, probably in the next few months.
What do you think about like other commodities, like what about like natural gas or oil?
Oh my God.
I mean, natural gas has been taking a pretty big hit the last couple of months.
Yeah, I'm long natural gas right now. Not too happy that I'm long, frankly. I had so much good support right down here, and you can see today's daily candle is just, it just got smoked. I don't know if there's contract rollover, if there's options, stuff going on here. But this is a meteoric drop in pretty much a straight line, right? I mean, if we look at the price range, I mean, this is, here you had this one big bounce candle, but if we take that high to the current lows, it's a 33% drop in natural gas with barely any green candles along the way. So again, I'm not really sure the whole extent of it. I don't know if year-end stuff is playing into it. Seasonality, usually it starts to do better come January, late December, January for the cold weather months. But so far it hasn't done that. And you're now getting to a point where you're starting to think about, you got to think about revisiting some of these lows. The only positive thing on this chart, and this is kind of the last gasp of support here, is if we look at this chart and go back to the lows of 2020, and we take this pivot low from 2020 and we extend it through, that's, to me, that's basically finally coming down into that level. So again, for me, at least, that, the reason why I'm invested, the reason why I'm dollar cost averaging, adding some more to it, is based on this trend line here. We'll see if it holds. What do you have any insights into this? I'd love to hear, just based on I'm in this trade.
Yeah, I don't really, honestly, I don't really trade it. I was just curious because I saw that it was selling off pretty aggressively, and I was looking at the chart and I'm like, well, I mean, if that trend line breaks, then I guess you have to start thinking about revisiting the pandemic lows, right?
Yeah.
Which would mean another, at least on the monthly time frame, another like 26% drop.
And I agree with that. And I would just point this out too, is like, so many people are like, oh, inflation's coming down. Look at oil, look at gas, right? But is oil falling from a recent high? I mean, just going back to October, oil was at $90 a barrel. Is that a good sign for the economy, right? I mean, is it, yes, it's bringing down inflation because, it's a huge commodity that people use on a daily basis, but I can't imagine a drop of what, 25% here almost is a positive for the economy. What are your thoughts?
I mean, I think it does sort of imply that demand isn't as strong. I think the real test will be as we get into the, because didn't it sell off last? Didn't Let me pull it up. I think oil sold off um, last year going into, let's see, yeah, it was selling off here in December, and I mean, I guess it kept going down even through May. Yeah, I mean, I guess my initial thought is that it's not, it doesn't really imply that there's a ton of demand.
Yeah,
And there have been some cuts as well to the supply, and it doesn't really seem to have had a huge effect, which is a little surprising, I think, to me, that it hasn't had such an effect. I would just look to see, does it get this type of a bounce? Like, I mean, if you look at 2018, it was basically selling off into into the end of the year, like October, November, December were red. That's basically the same thing we're happening here. Does it get a bounce as you get into the following year or not? I don't know, but I am a little surprised it hasn't been a little bit more bullish, because I mean, over here it was just going up every single week practically, and there wasn't even any great news to accompany it. It was
right.
just going up, and now it's just it's basically just sold right back off and retrace that entire move.
And I think one of the things that brings it up too is, like, it seems like the US stock market, which just continues to float up almost on a daily basis at this point, is kind of just very focused domestically, like what's going on here. But I think it's worth mentioning that if we look at the Hang Seng, like, the rest of the world, there are areas of the world that are in real trouble. One of them being the Hang Seng, the Hong Kong market in China here. It actually just made a new 52-week low. I mean, this is a pretty nasty downtrend. And I guess my question is like, how common, like, if China's going through what they're going through, are we totally insulated from that, or do we potentially import some of that weakness that they're experiencing? Because they're in a heap of trouble in terms of their economy, their real estate markets. Our real estate markets, I think, are starting to go down a little bit, and I do expect them to go down more. But yeah, I mean, there are some markets out there that have been absolutely crushed around the world.
Yeah, and then other ones that are, I mean, you have Germany putting in new highs,
Yeah.
which is incredible, considering that I think they're looking at negative GDP right now, I believe. If I'm not mistaken, I think they were one of the countries that was looking at declines in GDP. I can't remember if it was Germany or somewhere else, but I mean, yeah, that one's just exploding to the upside. And I saw a chart recently. I don't have it on me, but I saw a chart where it was basically showing how well, I believe, like, Germany was tracking China in prior cycles, and then this cycle there seems to be a complete deviation, right? Like, Germany's going to new highs, and China, the China market is, as you said, pushing new 52-week lows.
Yeah, let me just bring this up. This is the daily Germany 30. That's an incredible chart. I mean, look at just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, like 12 straight up days in a row, and look at from this low here. I mean, that is incredible. And again, this is what the big question that needs to be asked is it that their economy is so good, or that there's just money still soaking in the system that has to find places to go, right? And China maybe not the place right now, with Taiwan potentially in their economy. And so where else does that money go? Does it just find its way to the US still, because the US is still the US? Then you look at Germany, some of these more stable economies around the globe. I think Germany is one of them. But man, these are some wild charts. Like, historically, I've done this for 20 plus years, and I don't see charts like this very often.
China, the Hang Seng Index, it's legitimately 23.5% below the pandemic low.
Wow.
I mean, at some point, I guess I know we need to wrap it up, but I feel like I have two questions that come to mind when I look at this chart. First of all, is there a mean reversion trade here? Like, at some point, it's not like it's just going to go down forever, but also we also know that assets that are trending higher are more likely to keep trending than assets that are not, right? That's why people say don't catch a falling knife, because you never know how far it's going to fall. Then the other question it sort of brings to mind is that is this market for China, is this inflationary for the United States, because China would be then pumping liquidity into
Right.
into the system to try to to alleviate some of the pain. And I mean, it could be inflationary for the rest of the world. I guess it depends on how China handles it.
And I think that's more and more of something we're going to see, is that inflation gets imported by other countries, because again, if you think about it, right? So if they print a ton of money, inflation goes up in China, they're going to have to raise wages go up. We make a lot of our stuff in China, which means the cost of those goods has to go up. It imports that inflation over here. I mean, it takes multiple different levels, but it ultimately does. And I think more and more as we become a global world, recessions, and we saw this in 2008 too, in 2009, is that, we weren't the only country that went into that collapse, right? I mean, we kind of exported it to Europe in many scenarios as well as other countries. So, man, this has been a great discussion, buddy. It really has been.
Yeah.
But let's wrap it up. It's basically 11:30, guys. For everyone out there, make sure to follow Ben, and all his socials are below this video. He does some amazing work. The data, the non-biased stuff is just priceless. And again, especially in this environment, I think, there's so much emotion out there, whether it's in crypto or in stocks or anywhere, but you got to keep your head level. You can't let that stuff influence you. It'll catch up to you for sure. So thank you as always, Ben. Awesome, man.
Yeah, and guys, make sure you guys follow Gareth. He's got some great stuff too. His links to all his socials are down in the description below, as well as his website. Make sure you guys check that out, and we will see you guys